What's up, guys? Wanted to do a quick update on DraftKings. If you've been following the channel, you know I opened up a position, I think roughly about a week ago. Was it last Monday and Tuesday? And then I added on a little bit more on Wednesday, and I might actually be adding on some more here. So, um, first, I want to get into the technicals. Let me try to pull up this chart. So as you can see here, we have been trading in this descending trend line since all the way back to roughly about like March 23rd, March 24th, right around when we fell below on the MACD and crossed underneath. Um, RSI got down to a completely oversold area of $19 somewhere around May 13th, and we've continued to be trading downwards. However, just about 3 days ago, we did pop through this trend line. Also came through. This was on July 22nd, and finally went green on the MACD and started to trade above it. We are down a little bit on the day. I'll look to kind of hold this trend line to show that we're still actually in an upward trend. But the other thing that I wanted to point out here, if I can figure out how to draw, is we are kind of in this semi W pattern where we came down here and hit as low as 39.93, popped back up, and then came back down to a higher low of somewhere around like $42. And now we're heading back up. So, again, another bullish signal, something to kind of be aware of. Um, along with trading above on the MACD. RSI on the first lower end down here, we hit as low as 19 or 20, and then came down here and hit about 29 on the lower end of this higher low. RSI is kind of curling downward right now at about 47. We'll really want to look for this to get up in the 50 range for another bullish signal. If we take a look at the moving averages right now, the 50-day moving average is kind of like what we're trading around, and I would like to see this get up and cross above. This is the what are we looking at? The 200-day here, and also the 100-day here. The 100-day is trading above the 200, which is still somewhat decent, but we'd really like to see this 50 get up and cross above these, and potentially see some more traders trying to jump in on this stock. So, anyways, we broke the downward trend. We're forming a semi W. We've also crossed over on the MACD. RSI is heating up. We'd really like to be above 50 and get those moving averages going. One thing I do want to address about this drop that we see right here is, Hindenburg, one of my favorite short sellers, released a bogus report accusing DraftKings of being involved with illegal gambling, organized crime, which the company came out immediately and responded to. But that's kind of what you saw, this downward movement. And then you could see the stock rebounded off of that nicely. For those unfamiliar, Hindenburg has been known to release bogus statements as part of a short and distort strategy, basically to either cause downward momentum in a stock or pile on to downward momentum in a stock. I don't think there's much really to that, but that's just my opinion. All right, so the other kind of big thing that I noticed the other day, I think this might have came out on Friday, but Benzinga put out a report on it yesterday, was insider selling. So I got to be honest, insider selling is never something that you want to see when you're invested in a stock, and we did see some insider selling coming out this week, but I wanted to go over that. Let's see, pull this back up. All right. In the grand scheme of things, the selling wasn't too significant. Let's take a look at the forums. So the first person up here is Mackenzie Shalom, and basically sold about 21,000 shares of Class A common stock back on the 23rd. That was Friday, but still owns 21 million shares. So what is that, like roughly 1 to 2%? Another insider was Kalish Matthew. Basically sold a total of 96,000 shares from options exercise, leaving him with roughly, I think if you total all this up, it's roughly around 2 million shares in total. So about 5% sold in total. The other one that came in, and this looks like, what was it? Not last Friday, but last Wednesday, we saw Dodge Stanton, who was actually the most in terms of total holding, but far less in terms of the other insiders. He actually sold, I think, roughly, if you add this up, about 50,000 shares, leaving him with 43,000 shares which is basically more than half his stake in the company. So of all of these, I think that one probably looks the worst. And then this last one is Paul Lieberman, who sold roughly 85,000 shares, but he still owns, between all these different holdings, roughly about 2 million. So he sold somewhere around 5%. So to summarize, yes, there was insider selling, but we're looking at three insiders controlling millions of shares who got rid of, anywhere from 2 to 5% of their total stake in the company. Could have been for tax reasons or something else like that, but kind of nothing to see here. The other was more than 50% of its total holdings, but also not a big shareholder in comparison to the others, with only an initial stake of roughly about 100,000 or so. This is very rough math. I hope my percentages are spot on, but 2 to 5% of a total stake in the company, not a big deal. Okay, so analyst targets. So we have 27 analysts covering this stock with an average buy rating. 22% are labeling this a strong buy, 48% labeling it a buy, and 29% labeling it a hold. The high target here is $105. Average target $70, and then on the low end we have about $42.50. But the average of 70, I think, shows that this stock has a lot of room for growth. And hey, maybe we can hit the potential high of 105. In terms of earnings, obviously there's much more to earnings than revenue, but I don't want to make this video too long. So a quick look at prior revenue. Taking a look at their first cycle, which puts us right about Q1 would be in May. They 88 million in revenue. Q2, which would be August, about 70 million in revenue. Q3 in November, we have 132 million in revenue. And then Q4 in February, 322 million in revenue. Keep in mind, and if you watch my previous video, I talked about how football season is the biggest time of the year for sports betting in the U.S., along with fantasy sports in the U.S., and those are both part of DraftKings' biggest revenue streams. So looking at this year, Q1 in May, where we at right here, we see that the company actually brought in 312 million in revenue for what was previously its lowest reporting quarter, right? So if we go all the way back here to Q1, it was 88 million, and now we're over here in, a year later at 312. Q2's upcoming in August, and analysts are estimating it will come in lower than Q1 at 246 million, but this would still represent almost 250% in growth from the previous Q2 results. I know this is probably priced into analyst estimates, but the addition of online gaming like casino-style games, slot machines, among others, will also be a part of these earnings and could give DraftKings the ability to really crush it moving forward. They also just launched the casino portion of this whole thing in January of last year, so those wouldn't be part of these previous quarter earnings, and I think that's where we're going to see some extra coming in here. And then things really start to heat up as we head into Q3, which would be somewhere over here in November, and Q4, which would be in February up here, as we'll head into football earnings, and we'll start to see revenue increase, not only from daily fantasy sports, but also from sports betting. The last thing I'll mention is the addition of the NFT marketplace. Last week, the company announced that it would be partnering with Autograph to sell sports-related digital collectibles through the current DraftKings app in an NFT marketplace that they're creating. I think this is huge because DraftKings already has a large user base. And as NFTs grow in popularity, this can bring awareness to non-fungible tokens to those who otherwise would never have gotten into them, and potentially create new NFT buyers. Autograph, the company that's partnering with DraftKings, also has a partnership with Lionsgate, the movie makers. And it's going to give the DraftKings marketplace the exclusive rights to digital collectibles, including like athletes, like I think Tom Brady, Tiger Woods, Derek Jeter, Wayne Gretzky, just to name a few. And then if you look at Lionsgate and the movies that they have access to, you got, movie series like John Wick, Hunger Games, the Twilight series. So this is all expected to launch at some point this summer, I believe, and could provide even more boom for the Q3 and Q4 earnings report. Now, to me, the play, like what are you looking to get into? I've already said in my videos that I was looking into more longer term options that we're going to price in basically all three of these earnings reports, but I'll be looking to get out a little bit earlier. To me, shares or options are good here, as I'm expecting this stock to rise from now until at least run up to February earnings. Quarter 4 is always going to be the biggest earnings date for DraftKings. It encompasses the bulk of football, but also it can kind of be a sell the news type of thing. So if you're playing options, I would go with like February or April calls. That's what I'm doing at least. But I have the intention of selling well before that February earnings date, maybe in late January or early February. As you know, it could be one of those things where it gets up, they blow out earnings, and things start dropping. I know everyone's seen that happen in recent times. Shares, I would kind of anticipate selling around the same time. This is definitely a longer term play. I'm trying to get in a little bit earlier. I mean, yeah, you could wait, to see that like maybe August earnings dip and then try to buy in. But I don't know if we're going to dip that much lower with the announcement of this new NFT marketplace. And also the fact that earnings are expected to be almost 250 million this time around compared to 70 million a year ago. So it's going to be a pretty decent size increase. I think of almost about 250% is the current estimate. So looking at the option chain, if anyone, let me pull that up. Now, I know I covered this in my first video, but basically I'm targeting this February strike price of, where we at? Again, that way I can kind of get that lead up and draw up going into the February earnings. And still, maybe even April might be a better one, but I was targeting this February strike price of $65. Basically, I think at the time it was selling for about $2, $2.20. Now it's up to 310. But I still think this is a pretty decent buy considering where this stock can go. And if it starts to head up even earlier and we hit those heights in like October or November, somewhere around there, to keep the intrinsic value, I could even take some profits and roll out to a higher strike price at a later date if we end up meeting these expectations sooner. But I think somewhere in this $65 to $75 range, if I continue to add on at this point, I'll probably go 70s or maybe even go out to this April date and look to get into probably around the 70, 75 area, just because of the cost and the delta, being, I like to get in as close to about 20 cents as possible. But hey, at the end of the day, I think this is a great play. I think it's a great opportunity. Yeah, we could look for more bullish signals in the stock right now. I think right now, as I'm making this video, it's down about $1 on the day, but that's after 5 straight green days last week. And I think that the addition of the casino, the addition of the NFT marketplace, and then you're going to have football season right around the corner. This stock is really ready to boom. I think this is a perfect opportunity to get into a longer term, I don't want to say investment, but more of a longer term swing trade. All right. Anyways, have a great day. If you want to check me out, I'm live streaming every day from 6 a.m. to 8 a.m. Talking Stonks with Coach B. That's West Coast time, so I start about a half hour before the market opens and usually go about an hour and a half into the market. But either way, hopefully I'll see you tomorrow morning. Thank you.